So first get your chops down, learn how these things really work inside and out, and then do some practicing. I do use self-directed accounts for everything, for my conservative investing in my IRA with options, as well as my more active trading. It's all self-directed. And with self-directed accounts,
This is Henry Washington, and you're listening to the Average Joe Finances Podcast.
If you're watching this on YouTube, make sure you smash the like and subscribe buttons. If you're listening to our podcast, go leave us a 5-star review. All of our links can be found in the video description or show notes below. Hey, welcome back to the Average Joe Finances Podcast. I'm your host, Mike Cavagioni, and today's guest is Dan Passarelli. So Dan, super excited to have you on the show. Thank you so much for joining me today.
yeah, hey, thanks, Mike. It's an honor to be here.
All right, awesome. I appreciate that. The honor is actually mine to have you here. But I want to start this off the same way I start every podcast episode. And me and my audience want to get to know you a little bit better. So if you could share a little bit about yourself, tell us your story, tell us who is Dan Passarelli.
Yeah, I went to college in Chicago, and I wasn't very far from the exchange. And during lunch breaks, sometimes I would go down to the exchange and I would go up to the visitors gallery and just watch what was happening on the trading floor, fantasizing about it. And after I graduated, printed up a stack of resumes and knocked on every door of the Chicago Board of Trade building, got myself a job as a runner. I was making $9,000 a year, big 4-figure salary there. And ended up, long story short, worked my way up to end up becoming a trader, trading options at the Chicago Board Options Exchange, and had a fun career down on the trading floor. And then in 2005, I guess it was, the exchange asked me to teach classes and never really looked back. I found that was my calling.
Okay, right on. So started off, you went to school, you weren't too far from the exchange, very interested in it, went and was checking it out. But yeah, so you worked your way up to being a trader, and then they asked you to start teaching, right? You realized that educating people was more of your passion, more of your flavor of what you really wanted to do. And that's fantastic because that's what we do here at Average Joe Finances, right? Our whole goal here is to provide our listeners different methods and different ways for alternative investing and different ways to take control of their own financial freedom, right? So that's why I'm excited to have you on here, because that's exactly what you talk about and the things that you're doing. The first thing I want to ask you, right, because the thing that worked out really well for you was options trading. And for those that listen to my show, most of the people that invest in the stock market mostly look at like index funds, ETFs and stuff. That's mostly what I do as well. And I know that there are people that are interested in doing something different, maybe doing options. So if you could explain that a little bit to somebody that's never done or even looked at options before in the past, how would you explain that to somebody like a 5th grader?
Yeah, I'll tell you what, man, like options, like to somebody who's never looked at them, they're they can feel like a lot, and people hear things about them sometimes that make them sound bad and sometimes make them sound overly good, and they're just this simple tool that enables you really to control your risk, right? And if a lot of the folks who listen to your show are doing funds, ETFs, that kind of thing, that's great. Options can be something that can accompany that already existing strategy, but just do it in such a way to arguably make it better, to take some of the risk away, to improve some of the upside potential. So I don't know if you ever get into like Sharpe ratios or anything on your show, which is basically in a roundabout sort of way just compares your reward potential divided by your risk. And because it helps both of those things, it helps that particular metric, right? It enables you to make more while risking less. So that's a broad overview. I'll just break down what an option is. Just
If that's the case, then how would somebody get into options, right, to grow faster,
Mhm.
but keep that risk low?
Yeah. So there are several types of options strategies. There are two types of options, calls and puts. And you can buy them or sell them short, which is something that a lot of stock or ETF investors probably don't do with that asset, but it's very common with options. So one of the first entries into option trading for a lot of people is what's called a covered call. All right. So a call, if somebody buys a call, it gives them the right to buy a stock or an ETF at a particular price. It's called the strike price. And you own that until it expires for a certain period of time. So from that perspective, from a call buying perspective, basically that can create leverage for you. I pay this much for this right to buy the stock here. And if it goes up way above there, then I would exercise that. And now I have this much profit. So what covered call people do is they take the other side of that. They actually sell short the call to the person who's buying it. And the reason why they do that is because they collect that premium, is what it's called. The buyer pays that seller a price for that contract. Just when you buy car insurance, you pay a premium to the insurance company. It lasts for a certain period of time. Same thing, but a lot of the smart investors, they become the insurance company. They sell this contract. It lasts for a certain period of time. And basically what they end up with is if the stock goes up above a certain price, then their end of the contract is, okay, I'll sell the stock at that price. Which you can probably start to get the wheels turning a little bit and see some of these just inherent advantages. First of all, I'm getting paid to sell this contract, to write this contract. And if the stock goes up, I'm going to sell it at that target price. Like, these are two incredible advantages to even the most conservative and the most classic type of investor. And I like to say it's just simply a way to augment your current existing investing strategy.
Yeah, that's a great way to look at it, like an augmentation of what you currently do. You don't need to take away from what you're currently doing to get into something like this. It's almost like a side hustle within your main hustle. That's also maybe a side hustle for you. So if you look at it that way, it's like a double side hustle. Okay, how would somebody use that basically to build up their portfolio to the point where they would be closer to that financial freedom number, right? Is there a way to utilize this strategy to build up and then get yourself into something that's steady? Or is this something that somebody might want to do full time?
Yeah, it is something that a lot of investors do full time. When I say full time, I guess what I mean is every day. Once you get in the groove with it, like some of the people that we train, they log into their IRAs, spend 5 minutes a day, just a little tweak here, a little tweak there, and that's it. But it can be an everyday thing where you check it out and it's great. So yeah.
Okay, right on. Yeah, I do something right now with so I have a thrift savings plan, right? And when I log into that and I can move stuff around, I don't do it too often because, like, for me, it doesn't actually go into effect until the next day. So it's not like something that happens immediate. So I got to be really careful when I do that, because something that I might want to move my shares into something else because it's very low right now. But that next day when the market opens, and this won't actually go into effect until 12 o'clock that day, a
Mhm.
lot can happen between the market opening and 12 o'clock that day. So that's why I got to be careful with that. So yeah, that's great though, because when you go into your own, like if you're going into your own brokerage account, you can do that stuff instantly. So you're making these moves and it's happening right away. So that's one of the big differences between somebody that's going in there and doing it with an IRA plan, or someone like me doing it with the thrift savings plan. If you're going into a regular brokerage account, that makes a big difference. So this isn't something you could probably do with your retirement plan unless it's a self-directed IRA and then you have it put into a brokerage like that. I want to ask you, have you ever seen anybody do something like that and actually play with their self-directed IRA in the options game?
Yeah, as a matter of fact, covered calls I pretty much only do in my IRA, which,
Oh,
you know,
okay.
yeah. And like I was talking about going in and doing something within there for 5 minutes a day, but it's not like an in and out strategy. So basically, like the most important, like, how do I want to say this? The thing to really focus on is that if you sell this call and collect that premium, it's not just like a one and done sort of situation. Some, like on ETFs, some of these options can expire in like a week or so, right? So what I do is I'll sell one of these 1 week options. I do this all the time against spiders, my Apple shares, my Amazon, and a couple others. And what are spiders right now? They're 431-ish when we're recording this. If I collect like $1, yeah, it's okay, 0.25% or something like that. Okay, great. I do that 4 times a month. They expire once a week. Okay, so there's 1% in a month. I just sell them, wait until they expire, sell another, wait till they expire. And that's really how they reduce your risk, because if you keep taking in anywhere from a 0.5% to 1.25%, something like that a month, conservatively, potentially, like all that cash kind of P&Ls against those shares that you own. And even if the shares of your spiders or Apple or whatever go down a little bit over 6 months, if they go down 6%, you're no worse off.
Right.
So
You're
it's,
still making that average of 1 to 0.5% to 1% a week on that one particular ETF or share. And if you're doing this with multiple and you start adding that up, 1% from here, 1% from here, 1% from here, it starts to get pretty significant.
yeah. And like it is, like you mentioned the words financial freedom, this moves you towards financial freedom.
Yeah, absolutely. And then on top of that, you're the one in control, right? You're not just putting your money away and letting it sit there and hoping and praying that the market does what it needs to do so that by the time you reach a specific age, you'll have enough money to live off of for the rest of your life. This is you being active in the stock market. I look at it similar to real estate, right? So I'm a very passive investor in real estate as well. I like passive income. There's a big delta between what I do as a passive investor and what somebody as an active investor would do on a multifamily property, right? So my return is great, but the people that are the operators, their return is about 14 times more than my return. That's significant. So there is, a much bigger difference on whether or not you're actively investing or passively investing. And for the folks that are listening right now, that maybe the stock market's not for you, because we have a lot of, I'm sorry, maybe real estate's not for you. Maybe the stock market might be an option, right? Because you don't have to start with a lot of money. So actually, I wanted to ask you about that too. Since you don't have to start with a lot of money, what would you say to somebody that says, okay, I got $1,000. I want to get started in options trading. Where would you tell them to go today?
The first thing I would tell them to do is to get your chops down, learn a little bit about it. Because I see people start out with options. They're like, oh, okay, this is what a call is. I get it. It's leverage. I'll buy this call. And then it doesn't work out. And they say, got a hunch, bet a bunch. Hunch is wrong. Bunch is gone. So
I like that.
yeah. So first get your chops down, learn how these things really work inside and out, and then do some practicing. I do use self-directed accounts for everything, for my conservative investing in my IRA with options, as well as my more active trading. It's all self-directed. And with self-directed accounts, many of them you can what's called paper trade, which is basically just simulated trading so that you can practice. You're actually entering these trades, but they're pretend. It tracks it just like for real. So you get to practice. And then once you get that down, then you can start using real money. And if you're starting with a small account, like $1,000, and you want to trade, so now we'll talk about something different than what I was talking about. I was talking about investing with options. If you want to trade and make that another side hustle, I don't know how many sides we have now, but we got a lot.
The more the
Then-
merrier.
Yeah, exactly. Then you can use a lot of limited risk strategies, which could be low risk and they could be leveraged risk as well. It depends on which type of trading you would like to do. But I would start out with some low risk strategies like simply buying calls as a proxy for owning the stock so that you can take advantage of leverage and limited risk. And then there's some spreads and stuff. Oh, there's a lot of fun things you can do with options.
Yeah, I love that. And the fact that you do this with all these self-directed accounts, including your self-directed IRA, I think is wonderful because it's, again, like I said before, like you're actively taking control of your financial future, right?
Mhm.
You're actively the one that's in charge of it. You're not relying on someone else. But I want to go back to what you said at the very beginning of that question that I just asked you about somebody comes up to you with $1,000 and they're ready to start it today. What would you say to them? And I really like the fact that you said, hey, you need to go learn about this first. Go get yourself educated, understand what you're getting into before you get into it. And I think that's a mistake a lot of people make. They'll listen to a podcast episode like this or another one where somebody's talking about a strategy and they felt like, oh, they said enough in that episode for me to just, I feel like I could just go out and do it. Look, that's not what we're telling you to do right now. So big thing here is making sure that you go out and you actually learn about it first. So I'm glad that you heard some wave top stuff on that podcast, but that's only wave tops. And there's this vast ocean, right? You got to dive deep. You got to get down there, right? Otherwise, just sitting on the wave tops, you're surfing, and guess what? All the sharks are under you. Eventually, one's going to come up and get you. And yeah, I love using analogies and metaphors and stuff when I'm talking about anything. And being that I live in Hawaii, surfing is very popular, so I figured that'd be a good one to go with. But that's the point, though, that I'm trying to make, though, is that the education piece is one of the most important things. And then also, would you recommend like meeting people that actually do it and hearing about their successes and some of their failures, right? Because a lot of times you're going to learn more from failure than you are from success, because guess what? You don't want that failure to happen again, right? So is that something that you would recommend to somebody?
Oh my goodness. Yeah, man. Totally. In an industry like this, it's very common to hear people talk about, hey, I'm such a great trader. Here's all my great success stories. I love sharing my failure stories more. I've been doing this 30 years. I've had great wins and little losses and great losses. I've had it all. And yeah, I feel like there's a whole bunch more wisdom that you can impart or glean from the other side as just from failure stories. And like with investing, like a lot of people invest and even more active with self-directed IRAs or self-directed accounts in general. Options, the pool is a little bit smaller. Not as many people have discovered options yet. They've only been around since 1973 as listed things to trade. It can be harder to find people to get together with, but there are resources, and like online resources are one. We created a chat room just so that people from London can chat with someone in Hawaii or Chicago or Texas or wherever. There are those resources, and it's super, super helpful to be part of a community.
Yeah, that's one of the wonderful things about technology and the internet is that you could be talking to somebody that is half a world away from you in real time, like we're doing right now, right? You're in Chicago and I'm in Hawaii, right? So pretty far from each other. I think over 4,000 miles, maybe. I know it's like 5,000 miles to the East Coast. I'm not sure how far inland Chicago is. Maybe it's 1,500 miles. So maybe about 3,500 miles away. But it's amazing because we're talking in real time as if we're sitting across from each other as we're having this conversation when the sun's in a completely different position outside for both of us, which is crazy, but also at the same time amazing. And that's one of those things that's really opened up the door for people. Technology always will be that door opener, but also it could be something that slams the door shut. So you got to be careful with technology too, because you could sit here and do all the research all you want, but if you're looking at the wrong thing and you're researching the wrong stuff and you feel like you are you're armed and ready to go, but you're going in with the wrong information can be absolutely detrimental to anybody. And I think that's another thing I want to point out here too, is that options trading, just like anything else in the stock market or any other investment, there's inherent risk involved, right? So there's always that risk involved. So I really appreciate the fact that you pointed out that you like to talk about your failures as well, because not enough people do that. Not enough people talk about their failures because it's a hard thing to do. I actually talked about one of mine recently with a business that I started that failed. And it was painful to talk about, but I did a podcast episode about it. And I'm probably going to do another one going a little bit more deeper into that. And 2 other real estate deal failures that I had this year that were really big deals that really sucked when I lost them. But I think things like that are super important for people to learn from failure, right? Okay, Dan, I wanted to ask you, okay, so we talked about options trading and what it is, right? Now I want to ask you, like, how do you trade options? Like, what is like the secret sauce for you when you're picking an option to trade? Is there a strategy that you use? What kind of metrics are you looking at for information to make those informed decisions before you make a call or a put or anything like that?
Yeah. So I think let me jump back to the conservative investing case for options.
Sure.
So really what I do within my IRA is like all the stocks or ETFs that I own within my IRA, they're all buy and hold strategies, right? And so overlaying or augmenting those strategies with options, I use them for a couple of things. One is if I own a stock or an ETF, at some point, even with a buy and hold strategy, at some point, you don't want to own it anymore. Like it stops working. It's gone up enough and it becomes overvalued, right?
Yeah. At some point you want to cash out.
Right. That's one of the things that I'll do. I'll look at some of the stocks that I have or ETFs and say, okay, look, so here's at this point, this is where I feel maybe it's overvalued in the short term. And let's take here, let me pull up Apple. I'm looking up here because I've got like screens all over the place here on the other side of the camera. So Apple, it made a high back in the beginning of September, right around 190 or so. So what I might do is I might say, hey, looking at what's going on with Apple, with the chance of the things with the economy, blah, blah, blah. We could talk for days about all the fundamental features. But hey, I think that 190 here in the short term is probably about as high as I think it would go. What I would do is I could sell a call with a strike price at $190. And what that does is if Apple ends up going up above $190 a share, then the person who owns that is going to exercise that call. And so therefore I'm going to sell those shares to him or her at 190. So it's a lot like, just for those of the listeners who do trade in self-directed accounts, it's a lot just like entering a limit order to sell at a price where you think it's too high and getting paid to work that limit order.
Yeah, because you're making that return right away, immediately.
Yeah.
Yeah, that's awesome. And then it's a win for you and the person that's buying, right? Because now they got it at that discounted price and you are selling it at the price that you felt that it was overvalued.
Yep. And then there's another side to this, and that's the other option, and that's puts. So for a person who buys a put, that gives that person the right to sell those shares at a specific price, the strike price. And so a lot of people will buy puts for protection. It really is the definition of an insurance policy, right? Here's my floor. If it falls below there, I'm going to exercise my right to sell it here. I become the insurance company again with that. So maybe I sell my Apple shares at $190 and I think, hey, I'd like to buy it back. We've had some oscillation or whatever in the price of it. Maybe I'll sell a put at the 185 strike. So then if the stock goes down below 185, that person who owns it is going to exercise his or her right to sell it to me, and I'm going to buy it at 185. And I collected the insurance premium when I sold that put. That ends up being a win. So you can see, like, I'm just constantly collecting these premiums and selling high and buying back low, and vice versa, all within the context of a long-term buy and hold strategy.
So actually, that's great, Dan. So what I wanted to ask you then, when you are collecting these premiums, what do you do with those premiums afterwards? Are you going back in and reinvesting it, or what are you doing with that money?
Yeah, it adds up, right? So like I look at the cash that's in my IRA, and it just grows week after week, month after month. And at some point I see a stock that I want to buy, and what do you know? There's more cash sitting in my account from doing this. In an IRA, traditional IRA, you can only add so much into it a year. I think at my age, what is it, 7,500 or something like that. But this is a way to get more cash in there to buy more stocks, and that just helps your account grow exponentially.
Yeah, right on. That's the way to do it. That's what people want to do, right? That's the kind of strategy most people want to have. They want to know that as they're going in there and making these trades, that they're actually making money and not losing money. So these are definitely great insurance policies to do it that way than just regular trading. And I've had some people come on that talk about day trading. And the more that I was learning about that, the more I felt like, man, it really does feel like a gamble unless you're really in it and you understand what you're doing. But this right here gives you that insurance policy. And a lot of the people that I talked about day trading, guess what they did? They did options. And that's why it made a lot of sense for them. It wasn't just buy low here and then sell high here. That's the standard of what you're told, right? Oh, always buy low, sell high, right? That's easier said than done, right? You could follow KPIs, key performance indicators all day and try to figure out where a specific stock is going. But at the same time, none of us have a crystal ball, right? And it could be going in the direction you thought it was going. And then the next minute, a CEO makes a stupid decision or gets in trouble, and all of a sudden their stocks are tanking, and you're like, wow, I messed up. So there's a lot more to it. But if you have that insurance policy, then you're good if it's going down anyway. So that's something that's pretty awesome. Okay. So Dan, okay, when it comes to why you're doing what you're doing, I think I have a pretty good idea, but I want to ask you this question anyway. And Dan, that is why? What is your why? Why are you doing options trading? Why do you think this is the best path for you towards financial freedom?
Yeah, it started out serendipitously. I just had that experience where I was just filled with wonder as a young man, looking at the trading floor and just wanting to go check it out. At that point, I didn't even know I could become a trader on the floor. I thought it was just a bunch of rich guys whose uncles set them up with big accounts or something. But after having gone through that business and learning about all the ins and outs of how options work as a professional, and after having started to teach options, because when you teach, you learn as well. First of all, I'll answer that question two ways. First of all, as far as like the teaching end of it, why am I in that? It might sound a little bit hokey, but it's my way to give back. When I was a professional trader, there was nobody who ever said, oh, hey, thank you so much. Quite the opposite. There's that guy, that professional trader. Now I am able to help people and help a lot of people. But as far as why I continue to use options, it's just because, like you said, any investment, apartment building or shares of spiders, all investments have risk. And using options is a way to take the bull by the horns and either take on more risk as an active trader if I want that, or as a conservative investor, to control that risk more and have less risk where I want to have less risk. It's just that's really what it is. That's how it can drive financial freedom for so many people, is being able to master this thing that's so elusive to master for most people, risk.
Yeah, risk is very elusive, but sometimes not so much elusive because it shows its face when you get hit with one of those failures. And it's like, oh, I see where the risk was now. A lot of times you might not see where your inherent risk is when you're going into something because you're so excited about it, you're motivated, and that's why I tell people, like, be careful after listening to a podcast episode like this, where you might get really excited over something, saying, "Yeah, I'm going to go do this right now." And you've got that motivation and that drive, and then you jump into something that you weren't too sure about, and that risk will show itself when you get slapped in the face with some failure. And that's why I tell everybody, like, hey, take a step back, think about it real quick, learn, get yourself educated like you were talking about. That's why I love that answer that you gave me before. And before you go into something, just take a step back, take a breath, and then get started. Okay. Awesome. So Dan, this has been absolutely fantastic. I want to transition this now into something that I call the final round. It's where I'm going to ask you the same 4 questions I ask everybody that comes on the show. And it gives us a good idea of how you are under a little bit of pressure, which I'm pretty sure is going to be fine because you're under a little bit of pressure every day with what you do. So I'm excited to ask you these questions. So if you're ready to go, we'll get that party started.
Okay. A little nervous, but
All right.
I'm ready.
You got a paper towel out to wipe the sweat and everything. All right, Dan, here we go. So the first question of the final round for you is, what's the biggest mistake you've ever made when it comes to your finance or business life?
That is a good one. You know what? I'll tell you what. I've definitely made a number of mistakes in my life, as I guess everyone has. But I'll tell you what, I think here's a good one. This is the first time I'm thinking about this. I didn't heed the advice that I gave just now when I started my business. I think that when I started my company, Market Taker Mentoring, I figured, hey, I was a professional trader. I know options inside and out. I went to the Chicago Board Options Exchange and had a really great mentor who taught me how to teach options. I know options. I know how to teach them. I'm going to start a company to teach people how to trade options. But if you've ever read the E-Myth, that it took me a while to really get my chops at how to run a business. And so I think that's a common mistake among entrepreneurs. And I sure wish I wish I took my own advice and learned how to run a business before starting a business.
Yeah, that is something that I think a lot of people find out the hard way.
Yeah.
So I appreciate that answer, definitely. All right, Dan. So this next question, it ties into the last one. These all kind of tie into each other, except for the last one. But that is, what is something that you've learned that you wish you knew when you first started out? And we'll keep this in the options trading realm.
Oh boy. When I first started out, options, they have some complexity to them. Okay. Which is why it's important to get educated on them. And one of the complexities is something called volatility, which we all know what that word means in some contexts. But option premiums that I was talking about, how much you collect when you sell them or pay when you buy them, they fluctuate based on supply and demand. And that's really one of the things that you're trading when you're trading options. And for sure, I wish that I had more of a solid, deep understanding of that aspect of option pricing, implied volatility, when I started out. And I think that's important for a lot of people to have as well.
Okay. Yeah, fair enough. All right, Dan, again, this question is going to tie into that last one, but that is, and I think I know your answer to this one, but do you have any tips or tricks that you would recommend to someone that is just getting started out today?
Yeah, I'll piggyback a little bit off stuff we talked about. Yeah, you saw where this is going. But yeah, just don't jump in head first. Don't watch one 7-minute YouTube video and say, I get it. I'm going to put all my money into buying these calls. It's just too easy to run into trouble that way. Option investing or option trading can be a wonderful part of your life if you make it. There's a guy I know who used to say that options are like fire. You could use them to heat your home or to burn it down.
Oh, wow. That's a great analogy. Yeah,
Yeah.
love that. Okay. All right, Dan. So this final question is just an opinion-based question, and that is, do you have a favorite business, investing, or real estate related book or podcast or both?
Oh boy. Geez. Let's see here. I got to look at my book. Oh, I'll tell you what was a good one here. There's so many. I like to read. I set a goal every year of how many books I want to read in a year. One, oh, what is a great one is Misbehaving by Richard Thaler. So he was one of the, what do they call them? Behavioral economists. Danny Kahneman, Amos Tversky, but Richard Thaler, he was one of the early kind of grandfathers of behavioral economics. And it's just a really interesting book. Basically, what behavioral economics is like, we know how economics works, supply and demand curves, and there's all this theory, and all this classical theory works really well on paper, but some of it is not conducive with how humans' brains work about money and decision making. So that's really what that's all about, how people really think about things in finance, things that you and I both love to talk about.
Yeah, no, absolutely love that. I have not had that book recommendation on here before, so I wrote that one down. Definitely want to check that one out. Yeah, I'm trying to read or listen more. I've been listening to a lot of audiobooks because that's easy to do on my commutes and stuff. Right now, I'm listening to Meditations by Mark. It's the Marcus Aurelius. It's about his teachings on Stoicism. So that's been pretty good so far. Okay, that is it for the final round, Dan. So you can pat yourself on the back. You survived. Yeah, wipe the sweat off the brow. You're good to go. Okay, awesome. Now, that's it for the final round. However, I do have another question I want to ask you, and this is the most important question I'm going to ask you throughout this entire interview, right? Because for the folks that were listening that said, maybe this is something I want to get into, maybe options trading is for me, but I want to follow Dan's advice and learn more. So where can people find more information about you? Because I know that you're a teacher, you teach about this stuff. So where can they find you? Do you have a website, social media, anything like that you could share with us today?
Yeah, we set up a special link just for viewers of your show. And it is markettaker.com/Joe. Market as in stock market, taker as in take what is rightfully yours, 2 T's in a row, markettaker.com/Joe. And we welcome you to come by and see how maybe we can help, or if you want to join our community, look into our one-on-one coaching. Any way we can help, we'd be glad to help you along your journey to financial freedom.
All right, Dan, that is awesome. Thank you so much for sharing that. I will make sure that link is in our show notes so our listeners can copy and paste or click away. The only thing, listeners, the deal, don't do it if you're driving right now. Okay. Appreciate that. Hey, Dan, this has been absolutely awesome. I want to ask you, though, to close things out, do you have any final thoughts for our listeners?
Yeah, you're listening to this show. You're like, you've already taken the first step in taking control of your financial future, your financial freedom. And that's great, man. Just keep doing that. Nobody cares more about your money than you do. And hey, money is not the most important thing in the world, but it's better to it's better to have more of it than less of it. Just keep working at it, and it pays off. I promise you that.
Awesome. I really appreciate that. So, Dan, again, thank you so much for coming on today. This was a real treat. I felt like I got to learn more about options, which was awesome. Got a good page of notes here as we were going. And it was great to meet you and learn about you and learn about what you're doing. This was really fun for me and educational and informational. So thank you so much.
Man, Mike, thank you so much for having me too. It was really great to meet you, and I enjoyed the conversation. And yeah, let's keep in touch.
Awesome. Will do. And hey, I also want to thank all of my listeners. I want to thank every single one of you so much for listening and joining us today on the Average Joe Finances podcast with our special guest, Dan Passarelli. I'd really appreciate it if you can go leave us a 5-star review and tell us what you liked about today's episode with Dan. Aloha from Hawaii, and have a great rest of your day. Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.